Hello everyone, welcome back to my channel. So this video marks the end of the week number 87 in this road to 100k realized return challenge, and this video is going to be a little bit shorter than usual, mainly because this was pretty much a dry week in terms of economic data, earnings releases, as we mentioned in the previous video. Most of the focus and obviously so was what's going on in the Middle East, and I would say that again, as every so often it happened in the past, this was a week of two halves, and that was the case in this week because from Monday to Wednesday, investors were hopeful that given what came out in the news media, that there was some hope that a resolution for the conflict would be coming up soon. However, all those hopes were dashed by Thursday, because the military strikes intensified on that day, and Iran apparently, and I can show you here, I made some quick research here using Gemini, and why the market did drop so much on Thursday and Friday. Basically, Iran dismissed the peace plan put forward by the United States. Now there is a bigger likelihood that there will be some boots on the ground, as the US will try to take further or intensify its military action to end the war. And now on Friday, this is basically more of the same. Strikes continue unabated, with even threatening nuclear infrastructure, and the entity, the IRGC, which is now the, let's just say, the ruling elite of Iran, basically shut down completely the Strait of Hormuz, and so no ships would be passing by belonging either to Israel, US, or their allies. And as a result of all this, basically the markets tumbled almost continuously over the course of those 2 days. The oil prices really shot up to triple digits, and this is also a very worrying sign for the United States, because now their yields are approaching the 10-year Treasury yield is approaching 4.5%, and this is quite significant, especially for an economy which is now facing a debt burden of over 120% of GDP. And this is also not boding well for the current administration, especially as we will have midterms coming up in a few months' time. Yeah, and consumers are really feeling the pinch of higher prices, not only at the pump, at the gas station, but also in other products such as food that are heavily reliant not only on oil, but also on other resources that are dependent on oil to be supplied, such as, for example, fertilizers, which many of them, or a large portion of them, pass or come from the Middle East and pass through also the Strait of Hormuz. And because of this situation, this was basically the end result, and this is the weekly chart for the Qs. There was some hope here. Things were pretty stagnant around the 590 mark, but then on Thursday and Friday it was pretty much downhill the whole way, not only for the Qs but also for the IWM. And even though we don't have it, but the SPY, the ETF that tracks the S&P 500, came pretty much in the same way. And as a result of that, of all this, as a coincidence, and I was quite surprised, even though we were, of course, conservative. We tried to protect against it, but we do not have any shares assigned to us. This is our take for the week. Of course, assuming only the trades that we close or expire this week. So we closed this week for the Qs. We'll get to that. We'll get to the trades, but this is basically our take. A little bit over $710. This may seem not so bad, but we still sold some puts because we had the buying power to do that. And so I'm expecting that because of this particular downward trend that occurred over this week, I'm pretty convinced that next week will not be or we won't be anywhere close to this. These trades, some of them were quite good, but again, we are still trying to basically drag this Qs holding as much as we can, but this is proving really a drag to our portfolio, notwithstanding the fact that now if we let's just see where it is. If we just put up a zero here, it doesn't really matter, but if we subtract 30 cents per share in here, we will be around 609.94. And so this means that we have now gained more than $20 per each share of the Qs. And because we have 500 shares, that means that we already collected more than $10,000 just by selling calls on the Qs, which may sound impressive, but is anything but impressive. This position has been open, or we have been holding these shares for already 5 months now, and so 5 months with a position of 315,000. This is not impressive at all, but still, the fact that we now collected these $710, give or take, we have now crossed the $80,000 of profits, and so we still continue to go in the right direction, but I would say at a snail's pace. And I think that we will probably reach the week 100, and we will still not yet cleared or reach the end of the challenge, meaning 100K in realized profits, unless something happens really, really remarkable in the context of the war in Iran and the hostilities stop. I'm not seeing we return to a normal profitability anytime soon. But let's see the trades that we did basically, which were a few. Let's skip Monday, because Monday we showed already in the previous video. We did nothing basically on Tuesday, but on Wednesday, because these puts on the junior miners, silver junior miners, were very close to zero. It was only 4 cents, and keeping in mind that we bought them at a much higher price. Let's see, we bought them at 26 cents, and because there were still 2 days left, and these were already at 4 cents at the beginning of the session on Wednesday, we decided to buy them back. We received an annualized return of a little bit over 54%, and we use this buying power to sell a put expiring the next week, next Thursday, with a 63 strike price. Again, because we also need to put a dent in the cost basis of ARKK, we received 28 cents for this. Now, this was an interesting one because we were faced with the decision of buying back the call that we sold on NVIDIA for Wednesday. and we could have bought it back at 1 cent or something like that, and rolled over to Friday. But given the fact that these Nvidia shares on Friday crossed the barrier of 180, and we can see here they were very close at some point, and they were even in the money at the beginning of the session on Wednesday. I felt that, all right, maybe it makes sense, because of course the market was behaving this way. I felt it makes sense that, all right, we are not going to roll over, because if we roll over, and again 180, we will probably leave some money on the table, because if the stock rises further on Thursday, we will be able to sell a call at 182.5 or 185, and we still collect a nice premium while still keeping open the possibility of a capital gain. And so I decided to let it expire. However, this move backfired, as you can see, because the reverse price behavior happened. There was a gap down, and so if we had rolled over the position, it would have been much better, because we still have collected a premium, which according or based on this price. But again, we did not do that, and so we still sold a call on 180 on Thursday, but the premium was nowhere near what it should have been. And also we took the opportunity, because we had the buying power to do that. We sold also 2 puts expiring next week on the junior miners with a 24 strike price. If these puts are assigned, then we will be able to bring our cost basis down to slightly below 28. So instead of selling calls at 29, we will be able to sell calls at 28. But yeah, these are still live, so we don't know what's going to happen. And also on Friday, yesterday, because these calls were still with a week yet to be matured, but because of course the price came down so much, the calls were already quoted at 2 cents a piece. I tried to wait a bit on Thursday. On Thursday they were already at 2 cents. I tried to sell them at 1 cent, to buy them back at 1 cent, but it was never available. And I decided, all right, since we are already on Friday, it's still at 2 cents. Let's not wait anymore. We bought it back. We did not even got 2% of annualized return on that. It was 191. By the way, the calls on Nvidia, we got a return of a little bit over 75% annualized. Yeah, so yeah, we are keeping everything on track. We sold again calls on the Qs, but you can have a look at the maturity. This is almost 1 month earlier to collect 30 cents. And again, just as I mentioned in one of my previous videos, I'm not gonna lower the cost basis or the strike, because at this point the market is so depressed that any single development or any other tweet or post from US President Trump in his Truth social media platform, anything can spark a rise, a strong increase in the prices. And so I'm not going to give in to that temptation of getting a better premium or reducing the maturity by using a smaller strike and being exposed to a capital loss. We will just stick to our plan. Even if we have to compromise on our returns, we still keep the potential open to break even, and we'll continue to collect premiums on this. It's the best, it's the safest strategy at this point, and I don't want anything close to what happened on April the 9th last year to happen again. And yeah, that's why we are keeping things going forward. We collected 30 cents. I'm pretty sure that we won't let these calls continue to mature until the maturity date. We will probably buy them back at some point, because if the price does not rise by enough, these calls will rather soon be reduced to almost no value, and then we can buy them back. And for such a week, such a negative week, we had, as you can see, we had no assignments. These calls and these puts on ARKK expire worthless. These puts were very close to being assigned, because the price came down from around 70 to around 64 over the course of just 2 days. And so I was really wondering, wow, are we going to see these puts getting assigned from so far back? But it ended up not being the case, and so we would have been happy anyway, because we would have bought more shares and we would have brought the cost basis further down. But then, as you can see, with the price of 64, if we sell the calls at our cost basis, which is 75.5, we will get a very, very low premium. We'll probably have to extend this for 2 weeks, but let's just see, using data from Friday. Yeah, it's not even quoted at this point. Probably it will by Monday. But if the calls on 75 are at 2 cents, I'm guessing that unless the price skyrockets on pre-market trading on Monday, we will have no choice but going for the 2-week call. And even so, it will not be as great. It will be somewhere along the lines of 16, 70, 80 cents, 18 cents. So it's not that big. It's nothing for the 2-week call option. But yeah, that's what we got to play for. The same goes for Nvidia. Even though Nvidia, of course, is also an individual stock, but here you see that 180. Even if we extend for the whole week, it will probably not be that good. Yeah, this is very, very low premium. So we will be praying for a rebound and see what happens. The only one that is really in good shape, because we are going to sell calls at 29 strike price, is the SILJ, because at 29, with a cost basis of 29, we are rather close, within touching distance, and so we will be able to sell if we assume these prices, which it won't be the case, but I'm confident that we can get somewhere around 47, probably even 50 for these calls, which is very good. And yeah, and we will see, because I would really like to sell these ones so that we can then start attacking, because the prices are so depressed at this point on the RKK. We could start attacking the cost basis of the RKK and see if we can get rid of these shares. Now, for all of these, the main focal point for next week, because the next week is going to be a shorter week. It's going to be only 4 days. There's a holiday, Good Friday, on Friday. And on Friday, we will have the biggest highlight of the week, which is the jobs report. We will have an appetizer with the ADP jobs on April the 1st. But of course, this pales in comparison. It is still important, but when it comes to the actual jobs report, yeah, this one is much more important. But because this will fall on On a holiday, we won't be able to sell options on this day, and so the plan will be to sell options either expiring on Monday the next day, or to capture the volatility of this event, or we'll probably have to sell 2-week options on on the shares that we have, because we will still catch the PCE, we'll catch CPI all together, and so there is going to be a lot of volatility in those premiums, and we want to make the most of it. For Nvidia, we will probably sell for the Monday, not the next Monday, because that would be a 0 DTE, but we'll probably sell to here, and then here we to capture this event, and then we will sell again for the entire week to capture the PCE and the CPI. But for the ones that only provide weekly options, that's probably the way to go, but we will see what we are going to do. There are no earnings for next week as well, and again, just to keeping in mind what's going on. I think headlines like this, be very aware that of what comes out of this particular mouth, because many times it ends up not being true. But so far, this is pretty much it. When it comes to bets for the Fed fund futures concerning the interest rates, the Fed's decision for interest rates at the next meeting, I haven't looked at it now, but the last time we did it, it was also the same. Most likely, rates will remain the same. There's some bets for a 25 basis point increase, but in all likelihood, as things stand at the moment, are they all point towards another Fed meeting with no change in interest rates. And I think we pretty much touched everything. The last thing, we are almost 40,000 euros in the hole, but at some point in time we will get it all back and more, but we'll see. So far, feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions, and as always, feel free to like the video and subscribe to the channel, and we'll reconvene either on Monday evening or Tuesday morning to start the week number 88 of this challenge. And I'll see you there.